Yeah, I mean, so to put really simply, there's three things that help this come together. One, the cost of the device is minuscule now because of Moore's law. Two, the internet is ubiquitous, so it's all around you everywhere. And three, everything can be stored in the cloud. And so what you have is just this proliferation of information that can be stored on the website, whether it's a wearable device that tells me how many steps I did during the day, which I never used to know, but now I do, and it's fascinating, or whether it's something that controls the thermostat on my house. My car can be connected to tell me how much miles I drove every day, and hence my insurance can be adjusted by how much I drive. So there's lots of practical functions here and impractical functions that you don't really want, but all of this data becomes valuable, and the data feeds on the data, if that makes sense. And so from our point of view, the simple way of thinking about it is you go on from 2 connected devices, be it your phone and your laptop, to roughly 20 over time, or 12 to 20, when you think about your TV, your thermostat, your car, your gaming machine, essentially are all connected to the internet. They can all stream, and all of those connected devices just means a lot more semiconductors from our point of view. So we're going to play it from the volume game. We're going to buy the weapons manufacturers in this war. We don't have a big dog in the fight as to who's going to win the war, but we do know that a lot more things are going to be connected. Yeah, okay, so there's a couple, but the two big ones at the moment, or three big ones, are Skyworks Solutions, NXPI Semiconductors, and Avago Technologies, and you would have never heard of any of them. But ultimately, Skyworks essentially looks after the antenna on your phone. There used to be 3 basebands, there's now 11 between 2G, 3G, 4G, LTE, Edge. You've got 4 different types of Wi-Fi bands, and all these devices talking to each other makes it more complicated. So A, there's more devices for them. B, the content per device is higher. So they're just benefiting from this huge structural growth trend, and the stock's cheap. NXPI is a security chip inside your Apple iPhone, so they basically do PayWave. They do PayWave in your phone. And so security, once you have a lot of connected devices and a lot of data, there's going to be some security around that. They specialize in that. And Avago is more a data center play and a connected device play, because ultimately all this data doesn't live under your desk anymore, it all lives in a data center. So anyone who's leveraged to the data center is on the play here. And all of this is going to happen whether Greece goes broke, Spain goes broke, or you know, the US is in recession or not. It doesn't matter, because this is happening purely because of Moore's law and cloud computing. And so from that point of view, we think it's a pretty safe bet. No, there's a couple that'll say they are, but having looked at them, they're not, no. That ultimately, no. Basically, you're either in Apple, the platform plays, and then underneath that, there's a whole range of semiconductor companies, and trust me, there's thousands to choose from, and you really need to spend your time to find the ones that work best, and we've spent that time. There are ones in Australia that claim to, but I can assure you they're not. Yeah, so the NASDAQ is higher now than it was in 2000, essentially. I think it broke that record last week. Within that, you know, Cisco, Hewlett-Packard, Microsoft, Apple, every single one of those companies trades below the market multiple. So they're below 15 times earnings. All the semiconductors companies I just mentioned are all below 15 times earnings. The stuff that's a very high multiple are the platform players like Facebook, Twitter, Amazon, and also the security companies, etc. And to be honest, they're going for this, you know, this $1 trillion jump ball. One of them will win, and so everyone's valued very highly. And so there's more losers there than winners. And so we would argue, yes, parts of the market look quite expensive. Uber's transferring at a $40 billion valuation, if that makes sense, off market. So parts of this are expensive. But one of those companies will win. But like I said, you can count them on one hand. The winners and the losers, there's a lot. So from our point of view, we're happy to play in the guys below 15 times. They're essentially good volume plays or good growth plays, and we still think there's a lot of good value there. But we don't disagree that there is, at least in cloud computing areas, it's a lot harder to find a winner at the right price.